Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be screening our next stock purchase. So I was really hoping I would have some funds available yesterday to trade on that really low. The main thing I wanted to buy yesterday is I wanted to get additional shares into AbbVie. It's not very important. I can see them continuing to kind of teeter off here. They had a nice dip yesterday below the price that I had purchased initially, which was 72.02. Actually, for the week here, I had made my original purchase around 72.04. My average is 71.82. So yesterday there was a really nice dip where I was hoping I could get some purchasable or some cash to buy, but I wasn't able to do that. I did just sign up for Robinhood Gold, so I do have some available funds to begin trading with, and I'm going to be looking at O as my next purchase stock. Now, I did screen a couple different stocks here, and I was looking between Pepsi, Johnson & Johnson, Procter & Gamble, Clorox, McDonald's, Triple M, and a lot of these companies are really well, but they're currently I would say overvalued for the time, not only in their price to earnings, but also along the lines of their price to yield. So a lot of these companies, you can see that Johnson and Johnson or Procter and Gamble, for a while back in November, January area, they had a yield of about 3.26. So their average yield was actually above the median line, meaning that they were undervalued at that time for the year. Now, a lot of these companies here that I'm purchasing are their growth in a sense. If we take a look at their growth overall for the 5 years, they're on an upwards trend. They're not really stale, such as Verizon or AT&T, where if you look at the 5-year chart, that they might be off by just -2 or positive 5%. So these are growth companies. So along the lines, 5-year annual yield, the 5-year average yield isn't so much of an importance, but it's still something I look at to consider. Things that are important here when I screened it for the year or even 3 years, we can see that for the year and 3 years, the yield right here is actually above the average line. So you can see that the average was around 4.25%. We currently are in the 4.35%, where the price is starting to make a bounce back. You can see that for the last couple months it's been sort of on a downwards trend. It is starting to pick up a little bit again, and that's where I'm planning to make my purchase here. I had hoped that I could make the purchase the other day when I was looking into the stock, but I just didn't have the funds available. And now with Robinhood Gold that I'm going to be holding for about a month, I'm going to go ahead and make my purchase and then kind of contribute additional buys on dip as I see it happen. If it continues to maybe dip down a little bit more, this is a stock that has really good growth and a future. So actually I can go ahead and we covered the yield. So as far as the growth potential for the dividend goes, we can see that for the past 10 years, since 2008, or I'll go ahead and max this out. So they started paying yields. They've been doing dividend growth for 21 years. So for 21 years, they have continued growth in their dividend payout. Prior to 2000, they were paying a yield. They continued paying their dividend payout through the recession of 2000, that tech bubble. They paid out through the 2008 tech bubble, or housing market crash, and they've just continued to raise their dividends. They had a huge spike in dividend payout increase in 2013, and then they had you can see the line isn't flat here. It is a slight increase, but very little, so it's enough to be considered growth. And then they've continued to pay out additional for the past couple years. So this really, it's very interesting, I suppose. I don't know the correct word for it, but we'll go ahead and look at the summary real quick. They do have a high price to earnings. They have a 49. So that's something that normally is deters me away from buying it, but right now I think it's actually considered a undervalued stock that is purchasable. They've had a couple of negative quarters, which means, which could be affecting why it's on a downwards trend, but I believe they are going to recover and easily continue their growth. So let's see here, they're currently trading at a yield of 4.49%, so about 4.5. Check out their statistics here. In the statistics area, I mainly look at the forward PE, so their price to earnings are going to go down slightly, meaning that they might become more profitable. And let's see here, also down at the bottom, I like to check for the dividends and splits. We can see that the 5-year average dividend yield is 4.49. Now, this is a kind of a growth company. If I switch over here to just kind of look at their stock, we can see that for the past 5 years, they've actually had about a 37% increase over 5 years. So that's about a 7% annual growth. You can see that during the 2000 recession here, they didn't slow down, they continued on their upwards trend. 2008 they did take a slight hit, but they recovered very quickly within about a year. So May of 2008, when the recession happened, you see that they recovered in September 11th, 2009. So really good recovery time, and then just continued just growing. And you can see that back in May of 2013 they had another dip of 29-30%, which is kind of what's going on here. You can see they have a dip of about 20-30%. Now this could continue down another 10% and then bounce back up and continue its upwards path, but I think it's actually going to continue now. I think it's going to bottom out here at 20%, 25%, and then go on an upwards trend up, which I am purchasing at a basically a 4.5 yield. So based off my other charts here, I considered it an undervalued stock. Let's see here. Their trailing annual yield is 4.35, so I am beating that for the annual dividend yield. Their trailing annual dividend rate was $2.44. They're $2.54, so they did raise it just a little bit ago. If we switch over to dividends.com, they are paying out an 84% ratio, but this is a REIT, so it's expected that they pay out a little bit higher than 70% for tax reasonings. Because they pay out so much, they can become taxed. I know a lot of REITs and say Maine and different companies out there that do retail and such. They do special payouts so that they aren't taxed heavily at the end of the year. So we can see here that they have had dividend growth for the past 21 years since 1996. So prior to the 2000-2008 recession, as we covered, they are going to be paying dividends. So in 7 days, as long as I own the stock, I will be getting paid on August 15th. So this matches my current look. I do want to buy 1 or 2 more stocks that pay out in August. So this will actually help me out here. So my other 2 stocks are AT&T and AbbVie Inc. that pay out in August. So I already matched for the AbbVie Inc. I'm going to be getting that dividend payout, and then I'm also going to be getting this dividend payout. As far as growth here, you can see that their charts, they have really nice growth. You can see that they pay out 19 cents, 20 cents here. They are at 21 cents right now. Quarterly, they pay out 21 cents per quarter per stock held. They're actually really cheap, $57. So, and we've already covered their growth for the past 5 years. There may be some other areas that I normally look at, but that was generally where I get most of my information off financials. There we go. That's something also that I look at. As far as revenue goes, they have had increased gross profit. You can see that they're hitting the 1 million marks. They've been going up about, this was a really nice jump, about 100,000 there. This is a jump of about 30,000, which they hit their 1 million mark there. They've continued to do their research and development. Actually, they don't have any research. Have some of their expenses. They're still continuing. Their operating income is still increased over the past few years, and their net income from continuing ops has continued over the past couple years. And their overall net income applicable to common shares has increased quite a bit here. You can see 227 and I think it was 14, yep, 256 and 2015, 2028, 288, and 2016. So they don't have any information in 2017, but they should be doing a earnings date July 26th, which is coming up next week on Wednesday. So I believe they're going to have good earnings, which is going to increase their stock overall. So good financials, good data. They are on an upwards trend. I think they're bottoming out, and I think they're going to be at a nice, currently undervalued. So they're going to continue their upwards trend here in the future. So that is it for this video. I don't know if you guys would agree with me on this purchase, but if you do or do not, go ahead and leave that in the comments below. It's always interesting to have everyone's opinions. So I want to thank you all for watching up until this point, and if you liked the video, remember to hit that like button, and please remember to subscribe for future financial videos. If you have any questions, please leave a comment and I will always reply. Thanks for tuning in, and I will see you next time. Bye.